So we know from our previous discussions that fiscal policy has two parts: government spending and taxes. And we looked before at some sources of tax revenue. We had highway tolls, user fees, property taxes, income taxes, sales taxes, and corporate taxes. And we know that some of these are autonomous, that is, they don't depend on income, and some do depend on income. So income tax depends on income, whereas sales tax and highway tolls do not depend on your level of income. So what we're going to look at now is what the Canadian government is doing when it comes to fiscal policy and how the government spending compares to the net tax revenue. So sometimes when we pay taxes, some of it comes back to us in transfer payments. That's where the government pays you. So that's why we talk about net taxes. Net taxes are the portion of the taxes you pay that go to the government and stay with the government. Now, if the government spends more than it brings in tax revenue, we have a deficit. And often we refer to this as a budget deficit. If the government spends less than it brings in tax revenue, then we have a budget surplus. And we've graphed before this relationship between government spending and tax revenue. As we said before, tax revenue is both autonomous and induced. So there's a certain amount of tax revenue that comes in regardless of our level of income. And as our income increases, then the government brings in more money in tax revenue. Higher income, you pay more in income tax. Whereas government spending does not depend on the level of income in our economy. Your government could decide to spend more or less. So government spending is autonomous. We can see, though, at higher levels of income that tax revenue is more than government spending, in which case at higher levels of income, when our economy is bigger, booming, what tends to happen? We are more likely to have a budget surplus. And when the income in our economy is lower, so collectively our gross domestic product, the total value we make, and then the equal amount that we earn, national income, is lower, then what happens is that the government spending hasn't really changed unless they change their policy, in which case we're shifting up and down. But because we're making less income, we are paying less in taxes and we're more likely to have a budget deficit. So the question for you is, where are we right now? What is our income level? And do we have a budget deficit and a budget surplus? So let's dive deeper into what's happening in Canada. This video is made in November of 2020, but at the time, the government had not released a budget for quite a while. And that's because, of course, COVID is causing disruptions and is making it difficult to forecast both revenue and expenses. So we'll look at the most recent posting from the federal Canadian government, and that's the 2018-19. So you can see here federal revenue. So that's the money coming in to the government, and it's mostly coming from income tax. Okay. We can also see other types of taxes that we pay: corporate taxes, GST. A portion of your paycheck goes to things like EI, and so those are taxes you are paying to the government. How do our taxes compare to other countries? Well, you can see here in the lighter blue the income tax, and the darker color you can see our Social Security. Or what we have, CPP. So where are we compared to these other countries? Well, our effective tax rate, so we have tax brackets. An effective tax rate is kind of the average, what the typical person pays. And so you can see here different effective tax rates for different countries. And we fall at about 30%, so we're right about here. So the average Canadian, when you combine both their income tax and their CPP, they're paying about 30%. Okay. Now let's look at, so that was revenue, tax revenue. Now let's look at expenses. So what does the government spend the money we pay on? Well, you can see here at 27.8%, it says major transfers to persons. This is transfer payments. Since the 1970s, we've had quite a number of transfer payments in terms of welfare programs. This would be things like employment insurance, AISH, subsidies to individuals, and so you can see the large portion of our federal expenses is in form of transfer payments, the government paying you. And you can see there's also transfer payments here in the term of from the federal government to the provincial government. So some expenses are within the jurisdiction of the provincial government, like education and healthcare. And so the federal government can provide funds to assist in those expenses. And that's what you see here. And here you can see public debt charges. So this is an important thing to note because we're going to look at the US in just a moment. But this is the interest on the federal debt. Okay, so in terms of the overall expenses. All right, so how have we done in terms of government spending versus tax revenue over the years? So you can see here that in the 90s and early 2000s, we had a budget surplus. But since about 2005, 6, here's the recession in 2008, 2009, we've had deficit spending. So we've had a budget deficit. I guess this is technically 2009. Budget deficit. Okay. Now, is this a concern? Well, that really depends. We know that if you have a deficit and another deficit and another deficit year after year, you get debt. So debt is accumulated deficits. Now, is this a problem? Well, that depends on whether the debt is cyclical or structural. Oops. And we've talked about that previous. So recall that cyclical debt is where you deficit spend some of the time and you accumulate debt, but then you pay it off in the good times. So when you start to get your budget surplus, when the economy's booming and income goes up, and so income tax is going up and we're getting a budget surplus, are you starting to pay down that debt? If so, you have cyclical debt. If, though, when the economy is doing well, when that income goes up and that tax revenue is coming in, if you continue to have a budget deficit, so we then just keep accruing more and more debt, you then have structural debt. So structural debt is when you accumulate more debt in the good times and the bad times. Well, which one do we have is the big question. We know it's a tough time now. We've had the 2008-2009 recession. We had oil prices tank in 2015-16 that led to some increased deficits, particularly for the Alberta government. And now in 2020, we have COVID. So these have created challenges to balancing the budget and getting budget surpluses. So the question is when things get better, will we pay down the debt, in which case we have cyclical debt, or will we continue to accrue more debt, in which case it is structural? Let's do a comparison to the US. This is the surplus or deficit for the federal government in the US. So if they are above that line that you see here, Then they have a budget surplus, and if they're below it, they have a budget deficit. And you'll notice that there was just a couple years here in 1999, 2000, when they had a budget surplus. Otherwise, there's been a lot of deficits. And deficits accrue and add to the debt. This graph is particularly interesting because it actually includes some of 2020. So you can see the impact that COVID has had on government spending in the US versus their tax revenue and the impact it has on deficits. Well, how do we compare to other countries? This is 2010. And so remember there was a recession, 2008, 2009. You can see here's Canada in terms of our budget deficit at the time. Here's the US in terms of their budget deficit at the time. And notice Ireland. What is going on with Ireland? Well, it turns out the Irish government had invested a lot of the tax revenue that they brought in order to have it accrue and bring in more money for the government. They had invested a lot of it in US real estate. And then the 2008, 2009 recession hit. There was a housing bubble burst in the US. We had a lot of people defaulting on their mortgages, businesses going under, banks going under. Well, that meant that a lot of that Irish money that had been invested in that evaporated. So now significantly less revenue coming in. You have spending during a recession to stimulate the economy. You can see a large deficit for Ireland in that time. Here you can see the proposed budget. This is from 2019 from the Canadian government. So this is the plan to balance the budget over the coming years. Now, of course, this was created pre-COVID. And as the government spends money on CERB and helping businesses and households with some of the expenses of PPE, protective equipment, plastic shields at grocery stores, masks, government spending to help with hospitals and getting ventilators. Those are expenses to the government. If we're providing subsidies to businesses to help pay their rent and to households, that's also expenses from the government. So that's going to impact their ability to balance the budget. The plan was before. So if we go back to the 2019 proposed budget, the plan was essentially to balance the budget by 2025. We can expect once data comes out and new proposed budgets come out that there'll be a significant shift in this. And in a moment, I'll show you some of the US data because they have some information already related to COVID, and you can start to see the impact it's going to have on deficits and debt. But before we do that, let's look here at this graph related to the US. So one of the challenges the US has, as we saw their graph before, is a lot of deficit spending accumulating to debt. So why aren't they balancing the budget pre-COVID, right? We saw here that for Canadians to balance the budget pre-COVID, we were looking at about 5 years. We're still recovering from the 2008, 2009 recession. We're still recovering from low oil prices starting in about 2015. Well, what about the US? When are they going to balance their budget? Well, if you look at the forecasts, and so this graph here was from, I believe, about 2011, you can see that the forecast under Obama was not to balance the budget. And if we look at the forecasts under Trump, the budget wasn't going to balance anytime soon either. Joe Biden has just been elected to be the next president. Will he be able to balance the budget? Well, here's why it's such a problem for the US to not have deficit spending. What we want to do is look at the things that the US government spends its money on. And so we can break it down into things like discretionary spending, so things they have choices on, and mandatory spending, things that are kind of locked in. We have defense spending. That's always the big discussion, is should we spend more or less on the military? And then we have the interest on the debt. Well, we saw here in this graph that under Obama, it was unlikely they were going to balance the budget. And you can see here under Trump, also unlikely to balance the budget. In fact, when you look at these lines here, what this shows is that budget changes made under Trump would actually add to the debt, partially because the Republicans under Trump were reducing taxes for both corporations and individuals, which means less tax revenue, same or more government spending, still accumulating deficit and debt. But why is it such a problem to balance the U.S. federal budget? Well, in tax revenue in 2020, the U.S. government brought in $3.4 trillion, or will bring in $3.4 trillion. 3,400 billion or 3.4 trillion. Now, that's the money coming in. Let's look at the expenses going out. Well, Social Security, in Canada we have CPP. Social Security is 1.2 trillion in the US. So automatically you can see that just under half of that tax revenue is going to Social Security. Then you add to that Medicare and Medicaid. So this is what the federal government is spending on healthcare at about 1.4 trillion. So 1.2 trillion plus 1.4 trillion, we're at 2.6 trillion out of 3.4 in revenue. So the challenge that the US government has is that Social Security, Medicare, and Medicaid have become so costly, and they're not discretionary, they're locked in, that it's very hard to balance the budget. Defense spending is currently at $690 billion. This is actually an increase over the last couple of years. When we look at the remaining spending, so what's the spending on all the other departments within the government, that's about 1.3 trillion. Now, this idea of deficit spending year after year after year accumulating to debt has become a problem for the US, right? Because the debt just keeps getting bigger. Well, in 2011, the US government basically said, we need a plan. We've got to deal with all of this debt. We need to balance the budget. So what they did is they set up this group of congressmen and senators to come up with a plan to help deal with the debt and balance the budget. And the idea was if they could not agree on how to fix this deficit spending problem, then automatic cuts would come in 2013. And the automatic cuts would be 10% reduction to every program the government funds and $500 billion reduction in defense. Okay, so bring this group together to discuss, come up with a plan. Now, one of the problems with this team is that none of them were economists. None of them had taken economics or business. They weren't able to come up with a solution. So in 2013, these automatic cuts come into effect. Defense spending is basically down $500 billion from $1 trillion to $500 billion. And all the programs are cut and taxes go up. This is after all of that's happened. Defense spending has continued to rise. Social Security, Medicare continues to rise. The interest on the U.S. debt is $523 billion. So the portion, that interest on the debt keeps getting bigger and bigger. And the problem, of course, is that if the U.S. government can't afford to pay the interest on their debt, that means that when people cash in government bonds, they don't get the money they were promised. No one's going to lend the government money anymore. No one's going to buy government bonds. There's no longer going to be investment by other countries or banks in the U.S. government. So it's hard to continue to deficit spend because when the debt gets too big, you got to pay interest on the debt. And if you can't pay the interest, no one's going to lend you money. Now, that doesn't include the $1.5 trillion the U.S. government has spent on COVID. So remember, they bring in $3.4 trillion in federal tax revenue. $1.2 trillion goes to Social Security. $1.4 trillion goes to Medicare and Medicaid. If you add in the $1.5 trillion for COVID, those three things are now the entire revenue for the country, not including defense, not including interest on the debt. So it's highly unlikely that in the near term, the U.S. government is going to be able to balance their budget.